Shachindra Nath is joining us from the management side to explain to us how significant this news is and what is the opportunity companies eyeing in the factoring business. Shachindra ji, afternoon. Thank you so much for your time. Talk to us about this factoring business nod which you got from the regulator.
Yes, actually, Ajoy, you might remember that in year 2020, the Factoring Act was amended because in India we have multiple licenses. Factors business can be only be to be done by factoring companies. Regular NBFCs were not allowed to do factoring businesses. So the act was amended. Then in 2022, RBI came up with a regulation, but the licensing process is like taking a new license. What it allows, and we have got the license. I think so we are the fifth company or fourth company which is a regular NBFC, but now we can undertake factoring business. But I think that the significant importance of this is that for large portion of small business MSME customer, they suffer from liquidity flow or working capital, because suppose I am a small business and I'm selling material to a large corporate and I want financing against that sales invoice, that could not be undertaken by a normal NBFC. Now we would be able to do that, because that invoice then can be a receivable can be assigned to us under factoring, and that large corporate would be obligated to pay us directly. So we have been in what we call the supply chain ecosystem business, but we have been doing it with great amount of difficulty. So that would now become a very large portion of our business, or we'll be able to what we call typically the sales invoice discounting business. We can expand, and that unleash the working capital requirement for small businesses. Second, the trades which has now been growing and getting established, we can now participate on the trades. And within trades, what we have seen the trend, mainly the banks and large NBFCs have been discounting invoices of AAA corporate and AA corporate. We understand the customer segment between the 15 lakh to 15 crore. So for those customers who are coming on trades but not being able to get financing against that invoice, we should be able to do it. And third, we manage a large liquidity float for ourselves, which we normally keep our money either in mutual fund or bank's fixed deposit. We would be able to deploy that under the trades and for liquidity purposes as well. So overall, I think so in our journey to being able to solve the problem of credit, this would enable with one more very defined product and under a regulated environment.
Shachindra ji, before I let you go, thanks for explaining that to us. Also, what does it mean for UGRO in terms of the size of opportunity? In terms of what it can, how meaningful can this business become as a part of your overall business in say 2 to 3 year kind of a period?
So look, if you as we say that if we were to be a 25,000 crore company in next 2.5 years, of which our ecosystem channel and supply chain would be roughly around 15 to 20%. I think so now we will have an incremental opportunity of another 5 to 7% of that volume to be accelerated. The large of the market, we say there is $100 billion credit gap in the working capital financing or the supply chain financing. And with this, we can augment that. Now it's very hard to quantify that number, but now we have a tool to go very hard on that. But I think so it would give us a very short tenor, attractive financing structure for supplier finances, which we will now, next quarter or so, we will unleash big time.
Excellent. Good luck on that one. Thank you so much for joining us on the show today.